Most traders lose before they even press any sell or buy button. And it's not because of bad trades, it's just having a horrible trading plan. In this video, I'm breaking down the exact smart money trading plan that kills the bad habits and implements great habits so that you can become the great trader you know you are. I'll be going over the morning routine, the mindset, and the exact confluences I use daily to execute smart money concepts with extreme precision. Let's get into our daily non-negotiables in our schedule. The first thing is that to wake up early, between 6 a.m. to 7 a.m. Eastern Standard Time. This right here gives you enough time to prepare for this morning routine. The second thing is to do something to center yourself before we go into the chaos. The market is extremely volatile, so you have to come to the markets with a clear mindset. You can use any app to do a 10 minutes to 15 minutes meditation, pray, right? You can either do a simple prayer that's gonna center you, or you read a trading book, any of your favorite books, something that's gonna center yourself and bring you calmness before we go into the chaos. The third thing that we usually do is do our morning journal to clear the mental clutter, right? You don't want to bring the past day data inside of this new day. Write down how you feel. Write down exactly what you want to look for the day. Write down your daily task, right, that you want to accomplish for the day. This right here is for your morning journal. The fourth thing that we do is to move your body, right? To walk, go for a morning walk, stretch, or just move your muscles, right? Do some quick push-ups, quick sit-ups, or just go for a walk before we go on the charts. Just like I stated before, the market is extremely volatile. You don't want to come in the markets tired. You don't want to come in the markets not ready, right? You want to be mentally ready for the markets because the markets is looking to get you. So you have to be ready to attack the market. And then the final thing for our morning routine is to do a quick self-check. Ask yourself, am I sharp? Am I focused? Am I reactive? Or am I in an emotional state? Because if you are in an emotional state, you're having a bad day, and then you go in the markets, that emotional state is going to reflect on the charts. The market preys on the people that are emotional, right? It preys on y'all because if you come in the markets angry, guess what you're going to do? You're going to be taking revenge trades, blowing your account and going on tilt. The markets is straight psychology. So if you have a horrible psychology for the morning, you're going to be blowing your accounts. It's point blank period. So do not come in the markets angry. Sit down and wait for your mind to clear up. Don't get in the market if you are in an emotional state. I tell my students this all the time. Whenever they're having family problems, I tell them to stay away from the market. Give the markets at least a couple days until you resolve that outside issue. Because if you bring that outside issue in the markets, you won't be seeing the setups clearly because you're going to be too much in your head, right? You won't be seeing the setups clearly and you're going to be doing your own thing instead of executing this trading plan. Do not come into markets with an emotional mindset. That's the main reason we advertise that you are coming to markets with a robotic mindset where you go in and you execute what you know you need to do. The second thing that I usually do, me personally, because I trade the New York session block, right? From Monday to Friday, right? You don't have to trade every day, and it's not smart to trade every day, right? Even though I trade every day, I don't take trades every single day. I just show up on the markets every day so I can see the daily price action and train my mind. The active trading hours for the New York session is from 7 a.m. to 11 a.m. Eastern Standard Time. If you trade the London session, the London kill zone is between 2 a.m. to 5 a.m. Between that time window is when you're gonna find the most volatile times for the London session. The core focus for the New York session is to trade the continuation moves, because when we review the London session, that's when our manipulation usually happens. The Asian session usually gives us our accumulation, the London gives us our manipulation, and the New York session usually gives us our continuation. For me personally, this is my risk rules, right? My daily risk limit is to risk 1.5% of my account. So, but I divide that between a couple trades, right? Depends on how I'm feeling, right? I never advise nobody to go over 1.5%. And I never advise nobody to place 1.5% on one trade. You got to give yourself room, right? That's why you scale down low, right? You go lower, stop trying to hit these home run trades. That's not how trading works. You don't hit your home run trades, right? That's not how it works. You divide that 1.5% between a couple trades. So your first trade, you're only probably risking 0.5%. Your second trade, you're risking another 0.5%. but you give yourself a max daily risk of 1.5%, so you have multiple trades. Just in case you lose one, you can go back in the market to make that 0.5% back. One thing that I also put is do not over trade, right? If you see that today is a horrible trade day and you already risk your 0.5%, right? That right there should tell you that, okay, I'm just gonna walk away for the day. I'm just gonna walk away. I already lost 0.5% in today's price action. Do not look like a good price action. So I'm not gonna try to make that 0.5% back. That's gonna lead to revenge trading and cause you to blow your account. I see this happen all the time, right? Students come to me all the time telling me they're blowing the account, all because of over trading and revenge trading. You see that you risk 0.5% and then it's a horrible trading day. Don't try to make that back quick, right? Give yourself time, right? Come back in the afternoon sessions or hold your capital. Trading is about capital preservation more than you trying to make money, right? You're trying to like hold your money because the market's trying to take your money from you. So you're trying to hold your money, and then once you get that proper structure, the proper setups to show, that's when you put your money at risk to double it, whichever ways you want to scale. And then another thing you have to understand is that if you have no trades, it's still a winning day if the conditions were not perfect. A lot of people, they think that every single day is supposed to be a winning day. It's not how trading works. I have to repeat that in your head. It's not how trading works. A no trading day, if the conditions weren't perfect, is still a winning day, because guess what? You save your money. I would rather you take no trades than to lose money, because it's gonna feel way more painful, right? It's gonna feel way more painful inside if you lose money, saving your capital for the next day that you might have to take that perfect trade. So if you have no trades that day, don't beat yourself up, right? You still save money, because guess what? Some people, they lost money and now they're in pain. They're in pain because they lost money, and then they're going on tilt, revenge trading to make that money back. Trading is straight up psychology, right? So if you have no trades for that day, it's still a good winning day. For me personally, these were my market watch list. I don't really trade these pairs much, I would say now. I mainly only trade NASDAQ, right? But these were just the main pairs that I usually trade. GBP/USD was my favorite pair back then. EUR/USD is one of the most volatile pairs. NZD/USD is another volatile pair. US30, NASDAQ, or XPS 500, those are the best, I would say, indices that shows up. It gives you a certain it gives us like price action every single day, right? US30, NASDAQ, or XPS 500, and then we use the US dollar index to gives us our our correlation for these pairs. But this strategy works on all markets. I get comments all the time. Does it work on crypto? It works on crypto. Does it work on forex? It works on forex. I used to trade GBP/USD every single day. It's my favorite pair. That's why I still do trade models, right? In hindsight, right? Those are models in hindsight of these right here. Those are not live trades that I take, right? Those are just me showing you that this strategy works on all markets, right? I only trade NASDAQ with the live trading team. NASDAQ is the only pair that I look at. I suggest you pick one of these, right? I don't recommend people just pick 30 pairs, look at all of them trying to find a trade, right? You're gonna lose yourself. Pick one pair and master that pair. That's why I give you multiple pairs. GBP/USD, EUR/USD, NZD/USD, US30, NASDAQ, XPS 500, and right, or any other pair, right? You could pick GJ, right? JPY, USD/SDK. Those are just the exotic pairs. Bitcoin, right? Any pair, right? Just pick one of them and back test it heavy, right? This right here, like, should be your market watch list. And then another thing for the correlation is that if the DXY is bullish, we should expect GBP/USD, EU, and NU to fall. If we have the US dollar index going up, these pairs right here, they're gonna go down. And if the DXY is bearish, these pairs is going up, right? That's kind of the correlation, right? That's why we use the US dollar index, because it kind of gives us like a sort of correlation, a inverse correlation of where these pairs should go. So NASDAQ, if the US dollar index is going up, NASDAQ is going down, right? Me personally, I only trade NASDAQ, right? I have to put that out there. I only look at NASDAQ. Let's go over our entry model in our confluence stacking. For our session bias, as you can see right here, the Asian session, just like I stated before, is where liquidity gets built. This is the fake move in tight ranges. The London session is where the manipulation and the stop hunt usually happens. And then for the New York session is where we usually have our continuations / our distribution, or you can call it a inspection, right? This is where the big rallies usually happens, and the news releases usually happens is during the New York session. That's why me personally in the USA, I trade the New York session, because during the night times when I'm sleeping, the London session is happening. But if you are in another country, you could trade either the London session and the New York session, both of them. You could trade both of them if you are in a European country, right? Or just any country outside of the USA, because during the London session is when I need my sleep, right? I need to sleep, right? So I'm not up trading at all the sessions because I can catch my trades during the New York session. Let's go over the entry confluences, the 8 factors to filter your trades. You only need 2 or 3 of these to justify your trades. So if you see 2 or 3 of these confluences, that right there could make it a A+ or just a B+ setup, right? Just like A+ setup, I would say. First, we're gonna go over the directional trend bias. We buy in discount zones when we are in bullish trends, and we sell in premium zones when we are in a bearish trend. This right here is the first thing for any trader, right? Is to follow the trend. The trend is your friend, right? Follow the trend. The trend is your friend. We're not buying, right? We're not selling in a discount zone, right? You're not doing that. And you're not buying in a premium zone. When price is selling lower, you follow the sales. When price is buying, you follow the buys. You stick with the trend. That's number 1. Number 2 is that we always wait for a liquidity sweep before we look for our point of interest. Did a liquidity sweep happen? Did price grab a prior old high or a prior old low? The liquidity sweeps is one of the most powerful things, right? We always wait for a liquidity sweep to happen before price hits our point of interest. The third thing is that, do we have a fair value gap, or what we call a imbalance present? After our clean displacement lower, after our liquidity sweep, did we see a fair value gap, right? Inside of a premium or a discount zone? Do you see a fair value gap that's aligned with a breaker or a mitigation block? This right here creates our unicorn model. These are just simple confluences. I kind of went over this in the third, but is there a order block or a breaker block or a mitigation block present? I have videos on all these concepts. Go on my playlist section and click the Smart Money Concept playlist. I have a video on order blocks, the breaker, and the mitigation, and just all the zones, right, that we use, the IPAs and all that, right? Just go on the Smart Money Concepts playlist, or click the first link in the bio and join the free community where I go over a free trading course going over all these concepts. Then for number 5 is, do we have a breakup structure or a market structure shift, or what we classify a change of character confirmed, right? After we have our liquidity sweep, did price push down lower to give us a change of character? Because now we need to be playing inside of a new dealing range. So do we have a breakup structure, a change of character confirming this new dealing range? And then for number 6 is that, are we aligned between a session timing, right? Are you trading the New York session between 7 a.m., right? It's between 7 to 10 or 11 a.m., right? I kind of just put 10 a.m. right here. But are you trading between your session times? You should never be trading outside of your session times, right? Between, like, the Asian session, just like I stated, is where the fake moves and tight ranges are getting built. So I usually avoid trading the Asian session because volatility is usually low, right? We usually always trade the London session between 2 a.m., right? This is the London kill zone right here, 2 a.m. to 5 a.m. EST, right? Eastern Standard Time. That's for the London session. For the New York session, right? Just a quick, I'm gonna update this right here, right? I just made that quick update. For the New York session is between 7 to 11 a.m. Eastern Standard Time. For me personally, that's my preferred time right here to trade, because that's when I see the most volatile moves happen, is during the New York session kill zone. In 7, are we playing inside of the OTE level? I just released a video on the OTE, the optimal trade entry. The key golden ratios are our 0.62 level, our 0.705 level, or our 0.79 level, or the 0.88. These 4 levels right here, if price wick inside of one of these zones and all of this right here is aligned, this right here makes this a extremely powerful zone. I'm gonna go over chart examples at the end, so stay tuned, right? And also is the momentum reaction, right? Do we have momentum valid, right? How is price coming to our zone? Is price just dropping like a hot knife, right? If price drops like a hot knife to your zone, do not take that trade, right? That's one of our rules. If price is coming too fast to your zone, walk away from that trade, right? Walk away from it. Or do we have wick rejections, right? Price come to your zone and wick from it and then show you lower time frame movements, right? The momentum reaction is one of the most powerful things that's going to save you a lot of money. But this right here was our entry models in our confluence stack. This whole PDF, I'm going to have it also in the free Discord. So make sure you join the free community. I'm giving this whole trading plan PDF so you can follow it along also when you're trading. And last but not least, before we hop on the charts and execute a setup, I'm going to go over this trade execution plus our end of day flow, right? For our trade execution is that we only trade optimal setups only, right? These are the only setups we execute. Optimal setups. If the setup is not optimal and it doesn't have the confluences like we stated before, I do not take that trade. The second thing is that if we have no setup, we observe and we walk away, right? If you have no setup for the day, it's still a winning day, right? It's still a winning day because you are saving your money, right? You're not giving your money away from the markets, right? No setups, just observe, take notes, and just walk away for the day. Don't force no trades just because you're trying to make money for the day. Do not do that. That's not how trading works, right? Observe and walk away. And also, if a point of interest gets invalidated, like I stated, if price comes like a hot knife to your point of interest, cut the trade fast. Don't hope, right? Don't start praying. Don't start, I need this trade to work. Please, please don't do that at all. Cut that trade and walk away because the setup, the point of interest already gets invalidated already. Just cut it and walk away, right? Give it up, right? Give it up. Don't start praying to the market gods. Don't start doing that, right? The trade is done for, right? You either gonna end up losing more money than you are risking, right? Or you're just gonna walk away with a small loss, right? It's best to just walk away with a small loss and just take that hit, right? Gut that loss and journal it and walk away instead of you holding that trade and hoping that it starts working, right? I always close my trades fast. If you trade live with me every day, you're gonna see that I close my trades as soon as I see my point of interest gets invalidated. I close it fast at a small loss. I always walk away with a small loss because I can hold my profits for the upcoming trading days. And then for the live trade management, like I stated before, we watch for the momentum, price coming inside of our point of interest. Is price dropping like a hot knife, or are we getting clean reactions, right? And then we look for partials, right? When we're in our trades, never just hold your trades to a prior old high, right? Don't get greedy, right? I tell my students this every single day to not get greedy. Always take your partials, right, at either prior old highs or prior old lows or just recent imbalance zones. So that if you are up like $500, $800, right, take your money and walk away, right? Take your partials and track, right, and trail your stop losses. Never just leaves your trade running because you want more profits, right? That's just a greedy mindset. Like trading is about fear and greed. Those are the two things that's gonna kill you. Fear of you not executing, and then greedy of you holding to make more money. Though right there, like those two right there is the biggest killers. And then for third is to never marry a setup, right? React, not control, right? Like don't try to force this trade to work. I need this trade to work. This trade is gonna work. That's you marrying the setup. The market is not your friend. It's there to take your money and nearly manipulate you. So you have to react. If the setup, just like I stated, don't work, right? The point of interest don't work. Don't start hoping to the market gods. It's not gonna work for you, right? Just cut it out and walk away. And also stay detached. High probability, not certainty, right? Like I stated, high optimal setups only, right? Don't marry that setup. Don't say like, because you've been looking at the market for 4 hours, right? This setup has to work. That's not how trading works. That's not how it works, right? You already tried to test that probably, right? Did it work for you? It probably did not work for you, right? Follow these trading plans. It's because of these rules right here that's gonna save you and help you make a lot of money trading. And then for the daily review, it's to log trades in your Notion / Excel, right? Track your wins and your losses, because the wins gonna teach you what to repeat in the future, and the loss is gonna show you what to not to do in future trades. So every trade you take a screenshot of the before and the after, and then after whatever happens, if you win or loss, track your emotions. What exactly happened for that trade? Was I angry? Was I mad? Right? Track your emotions. And also, right, you can either do it like a weekly or like a daily backtest. For me personally, I kind of backtest every single day, trading day. After every single trade that I take with the live students, I go back and backtest that day at the end of the day, like a 30-minute to 1 hour daily backtest. This builds your intuition, right, for the next days, right, to know exactly what happened, right? Because every day, even if you lose, somebody else made money that day. What did they do, right? How did they make money, right? You backtest that day just to see, right? So in the future, you build that intuition muscle, so that you can start doing the things you need to be doing, not the mess ups, right? And then we save our clean markups in the Notions or the Excel files, whichever trading plan software you want to use. We close the charts after every session. We don't take no late trades. Like I stated, you don't want to trade you don't want to be in the markets for like 8 hours, right? The markets is not supposed to be a job. Pick a session, pick a time frame, and trade it and walk away, right? Don't start taking late trades. Close the markets and walk away after every session, or you're going to be giving away your profits, or you're going to be taking away more losses. And then another thing that I usually do is to read like 15 minutes to 60 minutes of a top tier trading book, like either the Trading in the Zone or Trading in the Zone, The Mental Game of Trading, right? It's a lot of trading books out there, right? The Best Loser Wins, that's another great book. Pick a trading book and read 15 minutes of it, right? Just so you can keep yourself in that good mental state, right, of always. And then just relax and reset for the next day. That's why I tell you guys, don't be on the markets all day. It's gonna fry your brains, and then the next day you're not gonna have energy to trade, right? Relax. Even if you take a loss, go to the gym, go walk, like go do something else besides trading, so that tomorrow you can come back to look again, right? Do not stay on the markets for 16 hours, because guess what? The next day you're gonna be tired now, because now your brain is fried, right? And now we're on our charts. I'm gonna be going over this New York session kills on trade, right? Just like I stated, mark your timers, right? The New York session is between 7 a.m. I'm gonna bring this up. You can see right here better. New York session is between 7 a.m. as you can see and 11 a.m. Eastern Standard Time, right? Just like I said, the first thing that I usually look for is a prior liquidity sweep of an old high or a old low, depending on the trend, right? As you can see, price push down lower and give us a liquidity sweep of this old low, right? This is our higher time frame liquidity sweep. This was a higher time frame zone. The price push down and give us this liquidity, right? Just like I stated, the London session between 2 a.m., right? Just right here, 2 to 5 a.m. usually gives us our manipulation, right? Doesn't price push down lower, right, to give us this manipulation low, right, to clear these old lows during the London session. And then coming inside of the New York session, right, what I usually look for is just for price to just rally back higher to give me a market structure shift of a prior old high, right? So we see that during the New York session between 7 a.m. we have another liquidity sweep also, right? I'm gonna mark this out too, right here, a second liquidity sweep right here during the New York session. Right now, I'm on the 15 minutes time frames. I'm on the 15 minutes time. Liquidity sweep, perfect. Now, the second thing I'm looking for is a market structure shift. You can see this right here could be my market structure shift. This old high or this old high right here, right? Whichever one you want to pick, right? Me personally, I like this old high because this was the one that pushed down lower to give us this higher time frame liquidity sweep. So let's play price. This is good right here. Price extend higher. I'm gonna pull this back a little bit, right? Because I'm gonna scale down on the lower time frames to show you how we enter this right here after we get our 15-minute break. So right here we have our breakup structure, or we can label this the market structure shift too. I just like this right here, right? This is our market structure shift. We can label it a change of character. It's all the same trends, right? I'm trying to tell you, just like, don't complicate it, right? Just follow the strategy. Don't try to complicate it. Just keep it simple. Keep it simple, stupid, right? I follow that that type of model, right? Keep it simple, stupid, right? A change of character is the same thing, where price was once in a downtrend, but now price changes character. A market structure shift is the same thing. Price was once in a trend, but now price shifts to another trend. Or you can even put it as a breakup structure, right? Whichever one you want to put, right? But now let's go down on the 5 minute time frames to see even more price action. And now on the 5 minutes time frames, right, as you can see right here, after we have our change of character or our market structure shift, right, I'm going to put a market structure shift right here, right, for the ICT traders. After we have our market structure shift, your first entry, right, you could be like, okay, what, like how do I enter, Spec? How do I enter this trade, right? Your first entry could be your breaker block. What is a breaker block? The breaker block is the last bullish candlestick before price push down lower, as you can see right here. So we see that price left this bullish breaker block right here. That price broke through. You may be like, why didn't you pick this as your market structure shift? Like I stated on the 15 minutes, this was the first one that gave me this higher time frame liquidity sweep. That's the main reason I use this as my market structure shift right here. This could be a market structure shift also, right, for the lower time frame traders, but I just like this one. All right, I just like this one because this is where the range started, right? Price didn't fail this one right here, right? It didn't break through none of these old highs. This was the original strong high, right? Price came back, respected, and then extend higher to break through it. So I like to use this one right here, right, as my market structure shift. This right here to me is just a lower time frame breaker structure. It's just an extension. So this could be your first entry. You could either use this breaker, right, on the 5 minutes. You see that this breaker is also aligned with a fair value gap, right? Let me zoom in a little bit. I'm looking for this to happen during the New York session kill zone, right? Between 7 to 11 a.m. This right here, I'm going to bring this down. Market structure shift, your breaker. And we also have this small fair value gap, right? The small fair value gap. So this could be your first entry, right? Place your trade and the breaker, your stop loss at these candlestick lows, and where I'm targeting prior liquidity pools, these old highs right here, this buy side liquidity. Perfect. Let's play price. Price pull back, mitigate the breaker in our fair value gap nicely, right? All during the New York session kill zone to then extend higher. But you may be like, what if I miss this trade right here, right? And if you miss this first entry right here, you may be like, what? Like, how can I enter on a second entry? We see that price left this fair value gap, right? This fair value gap was supposed to hold to push price down lower, right? As you can see right here. Price was supposed to use this fair value gap to come inside of it to then push price lower. But price violently broke through this fair value gap, making this what we call now a inverse fair value gap. We call this a IFVG, right? Inversion fair value gap. You'll be like, how do I take the trade inside of this inversion fair value gap? Me personally, what I found to be true is that the 25%, let me grab this quadrant right here. Quadrant. This is the settings. 0, 1, 0.5, 0.25, and your 0.75, right? These are your quadrant levels. I like me personally, the 25% of the inversions or the fair value gaps usually is always best, right? Price always usually, like sometimes, right, that we get the 50%. This is the 50%, but not all the times, right? It's not all the time you're gonna get that 50%. So that 25% is usually always well aligned, right? So I'm gonna leave this right here. And where is my stop loss? At the inversion fair value gap low. Perfectly right here. So I'm either looking for price to pull back inside of the 25% or the 50%. That's if I miss this breaker in mitigation block entry. I'm looking for this to happen all between 7 a.m. to 11 a.m. Eastern Standard Time, right? First, we had our liquidity sweep. Then we had this second liquidity sweep, right? This is usually our news release sweep or just like a 9:30 sweep, right? Price always usually gives us a second liquidity sweep before we extend higher to give us our market structure shift, as you can see right here. And on the pullback, right, price use this breaker, right? You could use their either use this breaker in fair value gap as your unicorn model for your first entry. But if you miss this one right here, when price violently breaks through this inverted fair value gap, this could be your second entry. So place your trade at the 25% or the 50%. But I stated, like I stated, the 25% is usually the best level, right? The 25%, and then you give yourself a little bit of room just in case price plays through, right? Let's play price. Price came back, tap inside of the 25%. Let's bring this closer, right? It may tap inside of the 50%. Let's see if it give it to us, right? It came close to it, right? I don't know if it did. Let me zoom in, right? It came close to that 50%, right? Kind of close, but it didn't really tap into it. That's why you always use that 25%, right? That 25% is a golden zone for the fair value gaps or the inversion, right? It's still the same is the same one, that 25% or the 50%, right? I always use the 25 just to give myself, and then I give myself room just in case it tops out of that 50%. And then it came back lower to then extend before we go and clear this buy side liquidity. But this right here is how we execute this trading plan every single day, right? Just like I stated, you can either look for this happen on all markets, right? On the GBP/USD pairs, on the forex pairs, the crypto pairs, or the indices. I hope you guys enjoyed this video and got a lot of this video, and follow this trading plan. Relentlessly follow this trading plan and study it. Well, this is it. I hope you got a lot of value out of this video. If you want the full PDF of this exact video, click the first link in the description and join the Spark Trading community, where you have access to a full library and a full trading course of me and my brother Arkham Trades, of all our PDFs and our free trading course, where we go over this complete concept. Make sure you like, subscribe, and comment down below any video suggestion or what do you think of this video right here. I love all of the feedback. But this is it. Spektrades out.